Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 13th. Wanted to talk about what's been going on in the markets this last week since we last spoke, and wanted to highlight and talk a little bit about earnings season and what we've seen so far through the majority of the companies the S&P 500 have reported. And the S&P 500 finished the week up strong last week, up over 2% on the S&P 500, which is bringing us above the flat line. And as we sit right now, we are hovering near all-time highs on the S&P 500, which is remarkable from where we were just 5 months ago in the month of March, hitting the fastest downturn that we have seen in market history. Now we have recovered that in the S&P 500, and one of the things that we've also been highlighting and talking about, one of the things that we want to pay attention to in these markets is the growth versus the value trade. And we've still continued to see some false starts where we've seen that value start to outperform the growth. We saw it Friday, Monday, and Tuesday of this week where we saw that value really start to outperform growth. You saw the NASDAQ negative a little bit and the Dow powering forward as well as the S&P 500. However, that trend only lasted for 3 days this week, and we're back to the growth trade, leading markets higher. Today, we're higher on the NASDAQ as growth and tech continue to lead us forward. But one of the encouraging things about this market is we've just finished up where the majority of the companies in the S&P 500 have reported their earnings. And one of the amazing things about this market is of those companies that have reported, 90%, roughly 90% have either met those expectations or exceeded the expectations put forth by Wall Street analysts for their individual companies. And that was a big question mark going into earnings this season, is how were the earnings for these companies going to be? Were they going to be good? Were they going to exceed expectations? Or were they going to be as bad as we had feared they were going to be, or even worse, underperform the expectations that were given? But one of the more incredible things is not only have 90% of the companies reported or beat, the average beat on the bottom line or your earnings per share from companies that are reporting is 22%. To give you some historical reference, the average beat when you are beating on the bottom line for companies is roughly 7 to 8%. So not only are companies meeting or exceeding the expectations, they're exceeding them at levels that we are not used to seeing. That's one of the reasons why we're seeing a market at the level that we're seeing today, is that these earnings are coming in to help support where the market is and the multiple that the market is trading at. Now, were these earnings down year over year? Absolutely. But they weren't down as much as we had feared, which gives continued optimism moving forward that we can see markets move higher as we enter into a volatile election season. But markets have the opportunity now to move higher based upon the earnings that have been done or that we have seen. So at any time, if you have questions about what's going on with your portfolio or what's going on in the markets, always feel free to give us a call. Ask us your questions. We're easy to talk to. We're here to answer those. So you can reach us at 904-346-3460 or check us out online anytime at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much for joining.